Now, the goal for every single property investor is to generate the best return on your investment. Now, there is certainly some assets and some markets that outperform others that are going to give you a better return on your investment. But in today's video, I'm going to talk about the most important aspect of property investing so that you can put yourself in a position where you're going to get the best return on your investment and have a nice, simple, easy journey to financial freedom. Let's get stuck into it. Now, there is no doubt about the fact that the location is hands down the most important aspect when it comes to property investing. It is the one thing that you cannot change. You cannot change the location that you choose to buy. You can easily, well, not easily, but you can change whatever is sitting on top of it. You can always renovate these things. You can knock them down and rebuild them. You can redevelop them and things like that, but you cannot change the location. And when you actually look back at history, the highest quality locations have actually generated investors the best return on their investments as well. Now, to keep this simple, the best locations to invest in here in Australia has been the major metro markets around Australia. Now, if you were to look at the last 30 years and average out the growth, the combined capital cities have increased 453% over that period of time, which is just amazing, actually being the top performing asset in Australian real estate over that period of time. And then if you compare that to the combined regional markets around Australia that have only performed at 313%, by buying in the metro markets, you're going to put yourself in a far better position over the long-term future. And this makes complete sense, right? When you actually start thinking about the fundamentals that drive capital growth, it's supply and demand, it's population growth, it's income growth, it's infrastructure growth. All of these things are going to put a lot of pressure in. The metro markets have the most population growth. They generate the most infrastructure growth, and people in these areas are generally earning the most money. And when you get into these capital cities, you notice that the property prices closer to the city or closer to the rivers or closer to the beaches or the bays are the most expensive. And this because these are the most prestigious, most premium locations, because as Australians, we love living by the water. We love living close to those lifestyle factors and the scarcity that the water provides. So land is the only thing that we can really build on, and the water obviously adds to that scarcity factor. And then as you sprawl out further and further from the city, you see more affordable property prices. So the intention should be to get as close to the city as you can afford or as close to the water as you can afford, because these locations historically have outperformed all others. Then when we start to get into the suburb level, we want to be on in the highest quality pockets of those suburbs. We want to be on the highest quality streets in those areas. We want to be on the biggest pieces of land as well, because the power is in the land, not what's sitting on top of it. You want to control the biggest portion of the land that you possibly can. Now, seeing a lot of these new developments and new suburbs that are opening up on the outskirts of the major metro markets, you can see that the land is getting smaller and smaller and smaller. So all of these areas that are already established closer to the city or closer to the beaches actually have bigger portions of land. So not only are you closer to the better locations, but you're also buying the bigger pieces of land. So you're just compounding your return on investment over time, putting yourself in the best possible position. So don't oversee this stuff, guys. Don't oversee the value of the location. I find that working with thousands of investors over the years, we find that a lot of people get very fixated and very emotional about the house that they're actually purchasing. When I try and help them understand the logic of the location that they're buying over the house, because we can add value to houses. We can renovate cosmetically, structurally, minor, major renovations. We can even knock down, rebuild shit boxes that are in great locations as well. So you can always manufacture or add value to these already established dwellings. But guess what? You can't change the location that you've actually purchased. And I want to take you through a bit of a compound growth example here so you can understand the value of buying the higher quality location in any particular suburb. Now, let's say you had a $600,000 budget. That's not really going to get you much in Sydney or Melbourne at the moment, but it goes a very long way in markets like Brisbane, Perth, and Adelaide at the moment, where we see the most value. So you'd go buy a $600,000 property and you set a 15-year strategy for that particular property. Now, if you were to buy further from the city, further from the beaches, in the lower quality suburb, on the lower quality street, on the small piece of land, over that 15-year journey, you would be lucky to generate a 4% return on your investment compounded. Now, I've written down so I can understand exactly what it's going to be worth. Now, if you buy for $600,000 today, you hold it for 15 years and you generate a 4% compound growth rate, you'll convert that property, or the property in 15 years' time will be worth $1,080,000. Now, I think that's a great result for a lot of investors, and most people would be happy about that. But not me, because I want the best return on my investment. So if I time markets correctly, if I buy closer to the city or closer to the beaches, if I buy that bigger piece of land on a better quality street, then I should be able to put myself in a position to generate a 6% return on my investment compounded over the next 15 years. And that is just 2% better off over 15 years, which will turn that property from $600,000 today to $1.437 million in 15 years' time. Now, it's the same amount of money over the same amount of time, but you can put yourself in a situation where you're over $350,000 better off in 15 years' time by identifying the higher quality location and working smarter, not harder. So don't oversee the location. Don't get too emotional and want to go out there and buy the really beautiful house. Sometimes it's worth actually sacrificing the quality of the house to have a higher quality location, and we can clearly see that this is going to put you in a far better position down the line. These are the things that as an investor I absolutely obsess about. These are the things that I care most about, is getting the best return on my investment over the period of time that I'm holding that property. And I'm always thinking my future position, not my short-term position right now as well. So I hope you've enjoyed today's video, guys. I hope you got a little bit of value out of today's video. Please share this video with somebody who is overseeing the location at the moment. Please share this video with somebody that needs to see this right now to make a better decision so they can be in a better financial situation down the line. Please like and subscribe our videos. Now, if you want to learn more about how to identify the better location, we have got many videos, tens of videos out there that you can listen about how to identify the right market, how to identify the right suburb, how to identify the right street, how to identify the right property, how to negotiate with agents so that you can purchase the best possible property and absolutely crush it over your journey to financial freedom. But either way, guys, I just want you to understand this information so you can make better financial decisions and become financially free sooner. But thanks so much for listening.
Perfect.
That was a good one.
Whew, that's a wrap. That's a wrap.
That's cool, bro. Yeah.
Oh, sweaty. So sweaty. Oh, that's good. That's so nice, eh? Oh.